Hey there, Mark Yagi. Welcome back to the Covered Call channel that we have here. So glad you're here. If you like what we're doing, by the way, hit like, subscribe, all that stuff that everybody always asks you to do. I'm asking for it too, because that's what the algorithm does, and it helps us get our message out there. Listen, today I've got some covered call examples. And if you know my system, we always start with the four cornerstones: the right stock in the right market at the right spot on the chart, and then we squeeze the juice, or we collect the time premium. We basically rent our stocks out to the street. Now, today we happen to have a really interesting market going on. A lot of stuff happening. We've had kind of a yellow, well, it's been a red market for the last several weeks. Now I think we're coming out of it. And so there's a nice bounce going on in the market today and a bunch of different stocks. Apple, Tesla, some of the bellwether techs are really bouncing today nicely. And I think we're coming into a yellow market. Looks like the market's actually going to turn yellow today, or if it hasn't already. So that means you got to kind of get ready. So here are a couple of covered call examples for you, just to kind of take a look at our methodology and see what we're looking at, just to see what we got going on. Let's start with ServiceNow. If you look at this chart, it's a good looking chart. Things are above the 50-day moving average, above the 200-day moving average. This is a weekly chart, so it's 40-week and 10-week moving averages. So it's looking pretty good. A lot of earnings growth, a lot of sales growth in this company. It's doing all the right things. So we want to keep this kind of thing in mind. Let's take a look at our options chain. And so our option chain, so we're going to go out a month, right? 31 days. You can see that's 31 days from now. The stock is at 577.04. And we're going to go ahead and just, I like, in this market where we're yellow, which doesn't kind of give us that green yet, I like to go a bit in the money. We're not going to go too in the money. The stock's at 577.04. We're going to go at 575, which is $2 in the money. But you're going to see here that we're going to get about, well, 2170 when we sell the call, which gives us 1966 in time premium. The rest of that is in the money amount, or what we call protection amount. So that's pretty good. So let's take a look and see what the calculations show on that. So the stock is at 577.04. The short call price is 2170, like I just pointed out. The strike is at 575, so $2 in the money. We're going to do 500 shares, 31 days, and you can see that it brings our basis down because we're getting $21.70. It brings our basic invested cost, our basis we call it, down to 555.34. That gives us a nice little cushion, doesn't it? So the juice that we're getting out of this is about $19.66. That's the whole point of the trade. It's not to make money on the stock going up. It's not to do anything other than make the juice. That's what we do in our system. That's why we're different from everybody else out there. We are going after that juice. And that juice is the thing that comes from outside that funds our account. That's like owning a house and collecting rent on it. That's what the juice is. The juice is the rent. So we're renting out our stocks. The percentage of that in 31 days is 3.4%. We annualize it by using the basis. It's 3.5% per month. And if you could do this over and over again, the same trade every month, and it closes above 575, that's the kicker, and we think it will. Hopefully we want it to. We're going to invest $277,670, and the annualized percentage will be 42%. Not too bad, right? Be good if we could make 42%. Now, there's no guarantee, of course, that it's going to go up. No guarantee it's not going to go down. There's no guarantees in life, right? But the idea is that we get probabilities on our side. That's what we always want to have: the right stock, the right market, the right spot on the chart. Those three things are really important. And then we squeeze the juice. The juice is important too, but all four cornerstones have to be in place in order for us to make money. So there's your first idea. That's ServiceNow. All right. Let's take a look at our second idea. That's a company called Palo Alto Networks. They just had numbers, I think, last week, and they did really well. I think they made like 80% return in their earnings per share increase. Okay, so this company has a lot of the good fundamentals that we like. That's the right stock, the right spot on the chart, pretty close to the 50-day moving average. You could make an argument that we're really close to the right spot on the chart. The right market, we're yellow, maybe a little bit early. So, but this is just an idea to kind of show you some examples of covered calls. And you can see it's got a good relative strength. It's got all the things that we kind of like. And now let's see what the juice is all about here. Okay, the stock is trading at 232.89, and we are going to go a little bit in the money, almost $3 in the money, but we're going to go do the 230s. The 230s right now are selling for $9.65. That gives us $6.76 of juice. Let's see what those calculations look like with that. There's your underlying stock price, 232.89. We're going to get 9.65 for the calls. That brings our basis down to 223.24. We're going to do the 230 strike prices. Let's just assume we're going to do 500 shares. That means we're going to invest at the bottom there $111,620 for 31 days. Now, at the end of this trade, we have the option of rolling it over, and that's normally what we like to do. If we like the trade still, we like to keep it going. We just roll it over and continue it almost as if it's a new trade, or we just continue to reduce our basis and the cost. So that brings us our basis down to 223.24 when the stock is at 232.89. So we get like a 5%, deduction in our basis already. Our juice is 676. Remember, that's what we're going for. That's the whole point of this, not to make money on the increase in the stock price. We want the stock price to increase. It's just how we think here. We think about cash flow. That's why it's called the cash flow machine. We don't think about appreciation like most people. So you have to kind of put your brain on a little bit differently. But if we can make, 3% every month, that gives us a 36% annualized return. A 36% annualized return is pretty good. And so again, this is all for education and information. This is not financial advice. I'm just giving you some ideas. You've got to do your own research. But these are some ideas that are pretty good. Like, we got the right stocks, the right price, the right spot on the chart. And then the juice is pretty good if you can collect 36% a year. And by the way, the only reason we put the annualized ROI, return on investment, on there is so you can compare apples to apples, right? If you just have something that makes you 2% in a week and something else that makes you 2% in 6 months, that's not apples to apples. That's apples and oranges. We want to compare apples to apples. And how do we do that? We use an annualized ROI. Okay, listen, I hope that helps. If you like what we're doing here, hit the notification bell, subscribe. We also have programs that we're offering from time to time. But you know what? If you want to just sit here and kind of learn what we're doing, that's great. If you want to learn a whole system for what we do, then we have that as well. I'll probably have a little commercial coming up right after here. So thanks for watching. Take care. See you on the next video. Hi, Mark Yagi here, wealth architect and author of this book on my covered call investing system called the Cash Flow Machine. Listen, what you just saw is just one part of creating reliable income of 2 to 4% a month from the stock market. But if it were that easy, then everyone would do it, right? If you want to learn how I create investment income the right way, then you need to learn and have a system with rules and what-if strategies so that you can learn what I do when the market goes against me, what I do when the stock goes against me, how to adjust my trade so that it's always in a winning position, how much to risk, how to build a multi-million-dollar portfolio that creates income of $10,000, $20,000, or $30,000 a month in semi-passive income. And best of all, the whole cash flow machine system takes less than an hour a week to implement. Just go to cashflowmachine.io to learn more, or click this link for more videos, masterclasses, and free resources. See you there. The information you just heard is for education and information. This is not financial advice.